Hey, it's Todd Ault and welcome back to Wall Street Words. Today's word is share repurchase. Now, if a corporation has a certain number of shares outstanding, let's say 1 billion shares, the corporation can go into the open market with its free cash flow and it can buy those shares back, retire them back into Treasury. Now, why is this important? This is a really important topic, and I'm not going to get into the political side of why this is done, but it does increase earnings over time. If the share count is reduced, the numerator and the denominator change. What ends up happening is when you buy more shares back, your earnings per share increases, and therefore theoretically the pie is worth more because the number of shares are smaller. Now, a really important anecdote and something to pay attention to in terms of share repurchase is Berkshire Hathaway. Berkshire Hathaway, Warren Buffett's company, owns Coca-Cola. Now it owns about 8% of Coca-Cola. But over time, Coca-Cola has bought back so many shares that without Berkshire Hathaway buying any more shares, its ownership of Coca-Cola has increased because Coca-Cola has reduced the number of outstanding shares. So Coca-Cola's share count has shrunk. Berkshire Hathaway's ownership of Coca-Cola has increased from 8.6% to I think it's just a tad under 11%. Repurchasing, a common way of boosting shareholder value and rewarding the shareholders. Instead of a dividend, they're out in the open market, they're buying back stock. Today's word is share repurchase.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.